morning, everyone. This is Ine Augustini with CID Insurance Programs. I'm the CEO, and I welcome you to our professional liability webinar. This one is going to be about learning the professional lines basics. So I'm happy to introduce Kevin Wills, who's the Second Vice President of USLI, and he's super knowledgeable about professional liability, so we're lucky to have him teaching this today. And then we've got Sienna Vasquez, who's our professional liability underwriter here at CID, and of course Jacob Cole, who's our lead marketing specialist. So I want to welcome you, and let's talk about some logistics before I introduce you to Kevin. Everyone that's been on our webinars before knows that you're going to be on mute, but you're going to be able to hear, just can't speak because there's too many of you out there to be speaking at once. So our chat room becomes very important to you and to us as well, because we want you to ask questions. We want to hear what you have to say. And so please pose them into the chat room at any time throughout the webinar, and Kevin will stop and answer your questions as we go. And then there'll be a short survey at the end that we'd really appreciate your feedback, so please take the short survey. Without further ado, I'd like to introduce, sorry about that, Kevin Wills.
Good morning, good afternoon to everybody. Thank you for having me. What I'm hoping to do is just kind of give everyone a basic understanding of what E&O is throughout the next half hour or so. It seems to be the question that always arises. Everybody seems to understand general liability, but when you start to throw in claims made and errors and omissions, a lot of brokers tend to not understand what that is, and it really, at the lowest level, is not that complicated. And I always say that just knowing a little bit in this space can really give you a leg up against some of your other brokers. So I'm going to talk about errors and omissions. We're going to go quickly through the difference between general liability and professional liability. We're going to talk about who needs it and why it's important. And at the end, I'm going to go through a couple basic claims. Claims are always interesting, and we'll go through a couple easy ones at the end here. So without any further ado, let's get moving. And if you could take over. There we go. All right, so general liability, where does it stop and where does errors and omissions kick in? So basic general liability, people, I'm assuming most of you know what this is, but GL basically covers bodily injury and property damage, typically covers personal advertising injury, and products and completed ops. Pretty basic on almost every GL form. Some GL forms, probably most, will give you coverage for the following things: slip and fall, property damage to others' property, that libel and slander. Now the key here is being libel and slander as a result of the organization's communications, not necessarily while providing professional services, and we can talk about that a little bit as we move on. The actual sales of goods or damages to damages to premises rented, very commonly covered on GL forms. What might be covered are the following: abuse and molestation, and that will depend. Sometimes you'll see exclusions for that, so you got to be really careful. Sometimes you'll see sublimits. You just need to be really careful about that exposure. Every once in a while, you'll see errors and omissions within the general liability form or as an endorsement. You got to be real careful with that. A lot of times it's bare bones and doesn't provide the E&O coverage that you need. Sometimes you'll see hired and non-owned. Sometimes you'll see coverage for off-premise operations and activities, like special events. You'll have some liquor liability, things like that. That's pretty common. They might be covered on the GL form, they might not. But here's what's not covered on a GL form a lot: automobile exposures, workers' comp, liquor, pollution, EPL, and data breach. And there's definitely other webinars out there to talk about EPL coverage and as well as the data breach cyber coverage. There are whole other disciplines. So what you need to be careful of, I mentioned certain exclusions. You need to be careful, and you need to look for these things on your GL forms. The abuse and molestation exclusion, this really comes into play when you're working with kids, whether it's a tutor, a teacher, an educational consultant, things along those lines which may have access to children and may want coverage for true abuse and molestation allegations. A lot of times you'll see carriers limit GL to premise-only coverage. Sometimes that makes sense, maybe if you're just working within an office, but sometimes it really doesn't, especially if you're a consultant and you're going from place to place. Sometimes there'll be limitations, called a classification limitation endorsement. That will simply limit coverage for certain things. So you may have GL coverage, but you may not have GL coverage for a few of the activities that you're involved with. And the most important one, and a lot of times you're going to see this, is a professional services exclusion. And when you see that, that means that anything that's considered a professional service, and these are things that we're going to talk about in a few moments, is not covered by the GL form. So bottom line is, if you're providing a professional service, do not rely on a GL form to provide coverage. You really need to consider a professional liability form. The standard ISO business form contains a professional exclusion, absolutely.
So there's a question, or it says, hi, Kevin, at some point, PLS addresses a simple way to explain CM tail to clients?
If I understood the question, explain what tail coverage is. Is that what the question is?
I think so. And I don't know where that.
I can explain. I can definitely go into that. No question.
Claims made coverage is what he's asking for.
So
Can
claims
we go
made.
into that later?
Yeah, we can talk about that. Absolutely. Let's get through this piece first, and then we'll talk about. We'll give a quick overview of claims made and then tail coverage.
Perfect.
So let's get into the legal foundations for E&O. So this will be real basic, but really what you want to look at is what defines a professional. It's a specific talent, a livelihood. It really is more of an intellectual ability versus a physical skill. So a doctor is more apt to have a professional liability policy than a football player. It really comes as like an intellectual type of thing. You need specialized training, education, continuing education. So insurance agents is a perfect example of all of us have had education, we've all had training, and we all need CE to keep our licenses. Perfect example. And a lot of times for professional, there's licensing bodies, you're certified, it's regulated by the state and or other professional organizations. So examples of this, these are real common. If someone says, when I go in and I say I'm the professional liability product leader for USLI, without fail, people automatically think of medical malpractice, legal malpractice, E&O for architects and engineers, and they're all very common classes of things that definitely need E&O. There are other ones, and we're going to get into a bunch, but insurance agents without question, real estate agents, accountants, and really any type of consultant that when people rely on your advice to make decisions, you need professional liability. So on a professional liability form, it's always going to cover a specific service. It's going to say services as a blank, and this is where you have the opportunity to define what your client is doing. And usually it says fee. So for example, services as a management consultant for others for a fee is a very common description of operations. The key is that for a fee is very common. So you want to make sure that if for some reason you're your client is performing services, but not necessarily for a fee. Maybe they're a consultant, but they're working for the church and they're doing it pro bono. You want to make sure that there's coverage for that. And you want to make sure that there's an endorsement in the policy to give pro bono coverage. So the real key with E&O, I'd say about 95% of the claims that I see always relate back to negligence. So negligence really is failure to perform a duty as subscribed. So in order for negligence to be proven, the following four things must exist. So there must be a professional duty. What that means is that you have a higher standard of care. You as an insurance agent are expected to know more about insurance than your neighbor who may be a arborist. So you're held to a higher standard of care. There's a breach of that duty or failure to conform to the standards of that duty. There's a causal connection between the conduct and the resulting injury. That's called proximate cause. So just because you're an insurance agent and you know a lot about insurance doesn't mean you're held to, you could be sued for anything that happens related to insurance. There has to be a reliance on the advice you give before a claim could be brought. And then that damage has to result to the plaintiff from that act, error, or omission of the defendant. So there has to be a proximate cause, a causal connection between the advice given and the damages. Presence of an implied contract, the services provided. Okay. So next slide. It's real basic. A client relies on the expertise of a professional. Due to this relationship, the client can suffer financial loss. The key here is financial loss. Typical professional forms that are not endorsed do not cover bodily injury or property damage. That's what GL forms do. This is financial loss caused as a result of the reliance on some advice that's been given. If the client feels the financial loss could have been avoided, then that's where the claim comes. There are a couple other non-negligence-based claims that you could see. First is more of a media exposure, but what you're seeing is a blend in media and E&O nowadays. And this is intellectual property. So intellectual property is more of like a trademark or copyright, a trade secret type of issue. An example of intellectual property, you may be familiar with like Adidas and Forever 21, where Adidas used the 3 stripes as their logo, and Forever 21 for years used 3 stripes on their clothing, and Adidas was upset about that and sued Forever 21 for intellectual property. So that's an intellectual property claim. How that relates to E&O, however, would be, let's say you're the advertising agency that is involved with developing that campaign. And say you develop Forever 21's campaign to focus on using those stripes to promote their product. That's where E&O comes in. You were negligent in advising Forever 21 to go that route. And you see it all the time. You see people like Coke and Pepsi, and they have a ton of people that all they do is surf the internet looking for violations of their brand. And you just want to make sure that if you are involved in anything that's in the creative space, that you advise your clientele to have intellectual property coverage. So that's really your graphic designers, your tech people, your marketing consultants, your advertising agencies. Very, very important coverage gets neglected for a lot of people, intellectual property. There are other ones that come up in the E&O world. This is like violation of statutes. And really you'll see fair housing stuff, consumer protection law, maybe if you're a collection agency. So certain coverage forms will provide extensions of coverage for these things. It just really depends on the class of business that you're working on. So really, who needs E&O? And I can tell you this, more and more people need E&O every day. there really has been a graying area where people would rely on GL for many coverages for the longest of time. And now everyone seems to need E&O. And it's the great thing about E&O, from my perspective, is that it's really become contractually required. I mean, you'll see some stats that are a little bit dated here, but the U.S. is becoming a very more and more service-oriented type of environment. You've seen a lot of startups. There's a lot going on in the tech side, and really on the miscellaneous side, where more and more people, they've been laid off and now they're going back into the world as independent contractors. And the great thing is that they're being required by contract to carry E&O. One is that they do have exposure, but the better part about that is, one, from our perspective as insurance agents, is that they're required to have it not just for one particular contract, but for every contract. So once they buy it, they renew. And typically what happens as revenues grow, premiums grow, and what's nice is that commissions grow for us. So it's great to have a policy that's evolving, that's growing, and they're going to renew. One thing that we've seen throughout this pandemic is that although other parts of our company have struggled a bit, and that makes sense, it's consistent with a lot of other carriers, because you're not seeing as much construction and things like that. But what you are seeing is a ton of growth in professional services. And our professional lines, especially E&O, has really seen growth over the last 6 to 8 months. So it's been nice from my perspective to be a part of that, to see some of the emerging classifications that are out there. And we'll get into that in a second, but there's a lot of growth in this area. So as I said in the beginning, just knowing a little bit about E&O, being able to cross-sell your book with E&O is a great thing, and is something that will help you and your agency grow. So basic examples of E&O, we talked about it a few moments ago: lawyers, doctors, dentists, architects, and engineers. But there's so many more. So tech is huge. So your basic things, your website design, your custom software, your mobile app, your managed service provider, your search engine optimization, your digital marketing consultants. I mean, these classes come in every day, and I'm telling you, the revenue on these firms are big. So again, big premiums and policies that will give them the coverage that they need, but they need it for that contract, so they will renew, which is a wonderful thing. Another hot class for us really has been, throughout the pandemic, employment agencies. As you can imagine, there are a lot of people out there looking for work. So this is the perfect storm for an employment agency, where they help people find that work. So they're growing, and they all need insurance, and it's something that, both USLI and CID are great markets for employment agencies. Other classes you may not have thought of: your private investigators. Background checking services is one that we could sit for another half hour and talk about background checking service claims. And I do have one to discuss, but I could give you 6. That there's a ton of claims in this area. Other ones, though, you'll see a lot of management consultants, HR consultants, people that are doing training, they're speaking. Definitely they're providing a professional service, and they definitely have some E&O exposure. Insurance agents, your accountants, whether it's a small tax preparer, a big CPA, or even a bookkeeper. Claims adjusters, especially with all the catastrophes that are going on across the U.S., this is a class that there's always a need for, and one that we see a lot. Billing services is one that is also a class riddled with claims, but one that, we will write, and it's important that you do have E&O for those classes. Real estate, big, especially, I know CID does a lot of property managers and real estate agents, so these are good classes. Mortgage field inspectors and property preservationists, all classes that need E&O. Ever-evolving allied healthcare. This is a booming class. This is another one we've seen a ton, especially in the home healthcare area. You have your physical therapist, your mental health counseling, you have your life coaches, social workers, all of them need E&O. And again, we talked about the people that do marketing, very important to have E&O with that media extension, marketing, graphic design, event planners, things like that. So before we get into what a claim looks like, I was asked to talk about claims made coverage and tail coverage. So in essence, what you have, you're typically used to GL policies, and GL policies are occurrence-based. So what that means is that as long as you had insurance at the time of when the claim occurred, you're going to have coverage. So say you had coverage back in 2015 for a general liability policy, and somehow a claim comes up that triggers the GL form from 2015, they'll point to the date of that claim and they'll say, yeah, okay, yes, you were covered during that period and there is coverage. Let's say, however, it was a professional liability policy and it's claims made. And back in 2015, you did your due diligence, you had your insurance, and the pandemic came up in 2020, and you said, hey, I just can't afford professional liability anymore. And you let your policy lapse. And then, as luck would have it, there's a claim that dates back to 2015. Unfortunately, since you let your policy lapse, the claims made trigger stops, and then there's no coverage anymore for anything that happened back in 2015 because you let that policy lapse. So the trick is with claims made, it goes back to the retroactive date. The retroactive date is active until as long as you keep your policy in force, it goes back to that date. But the very time that you let your policy lapse and there's no coverage, all coverage is wiped out. So there's no coverage anymore. So the very important thing is once you have an E&O policy, to keep it going for year after year after year. So that kind of gets into tail coverage. What is that? Tail coverage is another term for extended reporting period. So a lot of times you'll have companies that they're not providing services anymore. This is really popular like for accountants where they'll retire or they'll move on to a different firm. But it takes a few years for like accountants' claims to be discovered. So what this tail coverage allows you to do is report a claim for something that happened before you let the policy expire. So as I said before, once the policy lapses, there's no coverage going backwards. That's it, unless you buy this tail coverage, this extended reporting provision. So it allows you to report a claim from something that happened while you had an active policy. If you don't buy that extended reporting period, you don't have the ability to report that claim. That's what that really is. So that's a 2-minute claims made versus occurrence reporting. Versus occurrence description. We could go on for a little bit for that, but that's just kind of a basic overview of what that is. I hope that helped.
That's a good job.
So let's get into a couple claim scenarios. And this will give you just a basic, again, these are really high-level claims, but we've seen them. These are actual claims, and I think it always helps when you're selling professional lines, whether it is E&O or EPLI or even D&O, to have claims examples. And I know we have a ton that we could provide and CID could provide, but it's really important to be able to talk about what the exposure is when you're trying to sell professional liability to someone. But this one's a real basic one. It's a tax preparer or accountant. And essentially they were an accountant for a salon, and they did the taxes from 2009 all the way up through 2017. And what happened was the salon decided to sell the salon, which happens a lot. And the new owners, of course, they based their purchase on projected revenue. So they looked at tax returns all the way, from 2009 up through 2017, just to see how the salon did, to kind of get an idea of, what type of clientele, what type of profit they were about to make. And what happened was, I mean, go to the next slide if you could. What happened was back in 2013, 2014, there was an amended tax return. And on the amended tax return, the gross revenue was changed. The accountant didn't keep track of why they made the change. They just simply made the change. They didn't dig into it. And so what really happened was that the salon really falsified their documents. They lied about their revenue. But the accountant wound up paying on this because they didn't document why they made the change. And at the end of the day, the insurance carrier wound up paying $80,000. But it took a lot to defend. It was $53,000 to defend and $80,000 to resolve. So just an example of negligence. It's not that they were, I mean, they didn't lie about the revenue, but they were negligent in keeping accurate files. And that's why they wound up paying. So very basic example, but you can see that all the time. The next one is a background checking service. And again, there are many of these, but this is a very common one. Background screening firm was sued for attributing 6 criminal convictions and was sued for lost wages and mental anguish. Basically, they used a vendor's database, and this happens a lot. They picked up the results of someone else with a very similar name. It was John R. Smith versus John L. Smith, something like that. So the plaintiff, who had been arrested on car theft charges in 2004, applied for employment at the car dealership, and on the application indicated they had never had pled guilty or no contest to a crime, or never been convicted of a crime. He was the one that provided inaccurate information. But he demanded $100,000 in actual damages, $86,000 in punitive, and $13,000 in fees and costs. If you can go to the next slide. The crazy thing is the plaintiff was suing for $100,000, but it was a car salesman. The most he ever made in the past was $20,000, and really, in this capacity, was only going to be $10,000. As the best salesman at the company, earned $46,000. But it came back to the background checking service not doing their due diligence. They had insufficient protocols in place for maximizing the accuracy of information. At the end of the day, we wound up resolving it for $60,000 in an effort to make sure there was no further litigation. So a lot of times what will happen is that insurance carriers, they don't want to go to trial. No one really wants to go to trial, so they'll resolve it in an effort to prevent it from going to trial. This is just another example of someone getting paid who really, they lied, but yet at the end of the day, the background checking service was the one that was sued because they were negligent. It's crazy how that works, but those are just 2 examples of some claim activity.
So,
does
Kevin,
anyone have?
There's
yeah,
a
go ahead.
question that's been brought up, and I thought when you mentioned punitives, I figured this would come up. They're asking, with E&O policies, is the claimant able to also sue for punitive damages, unlike GL coverage?
They can sue for punitives. You don't see it a lot on the professional. I mean, on the E&O side, it's more of an EPL D&O thing. But yes, you can sue for punitives. It depends on if the state allows you to sue for punitives. So it will really depend. Most carriers will provide coverage for most favorable venue, and will provide coverage for punitive damages if allowed by law.
Thank you so much, Kevin.
Oh, my pleasure.
And thank you all for joining us. If you have any other questions, please type them into the chat room, and we'll answer them even if we've finished the webinar and signed off. We've got lots of tools and upcoming webinars on the website, so take a look at our new website and make sure that you check out. We have recorded webinars, and we have new webinars that we'll be doing. If you have professional liability submissions or you have questions about submitting something, contact Sienna. Her phone number's there and her email address, and then submit your applications today. We're ready to start quoting. Sienna's very efficient and will take good care of you. So we look forward to doing business with you, and those that are already working with us, we thank you for your business. Thanks again, Kevin.
My pleasure. Thank you, guys. It was great talking with everyone.
Have a great day.
All right. See ya.